We'll continue to watch oil. Prices rebound after plummeting yesterday. Brian Sullivan's on the phone. Brian, on a day where we're getting these headlines that appear to be holding out some hope, the Saudis and the Russians can talk again.
Yeah. Hey, guys. Good morning. Listen, that's the key word is hope. Is Saudi Arabia flooding the market just to draw the Russians back to the table? I mean, that's really all we're dealing with. The problem is we're dealing with a two-sided issue. One of the hydra, I guess, as maybe Kramer would call it, which is you've got a supply shock, way too much oil that's going to be flooding the market very soon, and you've got a demand shock. You've got slowdowns in Italy, which uses about 1.2 million barrels a day. I think the big risk from the oil market perspective, guys, is if the U.S., we use 20 million barrels of oil a day, 50% of that is driving, just driving around, right, commerce. If we slow down 5% because people aren't going to work or they're doing whatever, 500,000 barrels a day here taken off the market, then Spain, as you guys talked about, Italy over here, suddenly you could be in a world oversupplied by 5 million plus barrels a day at the same time that Russia and Saudi Arabia are having a schoolyard fight. And that doesn't bode well.
Brian, what are you hearing in terms of potential CapEx cuts from U.S. producers?
We're already getting a few, David. We got Diamondback, the original FANG, yesterday. We had a few others this morning. These are mostly smaller companies. We haven't yet heard from the big boys. Of course, remember last week, Exxon and Chevron had their investor days. So they just sort of announced basically stagnant investment plans. Everyone I talk to expects that every major or minor company is going, and by the way, more minor now than major, is going to come out and start having to cut capital spending, cut crews, cut jobs. I mean, there's a school of thought, and we've all been doing this a long time, and the school of thought used to be low gas is good for the United States because we drive in the end. It does matter to people to a point, but we've never had an industry of this size before, and so I don't think those historical comparisons hold up. It's an industry that employs millions of people, and you can say ESG, fossil fuels is dead. That's fine. Fossil fuels may die. We're going to need to figure out a new way to do things in the next, 2 years, if that's the case, guys.
Yeah. And what about the pressure on either Putin or MBS from their people? I mean, both are dictators, I guess. That's right. They are. I think that's a fair characterization, certainly of Putin. Are they willing to just withstand whatever it is pain they're putting on their own people as a result of the decisions they're making here?
David, you asked such doggone good questions. That's the problem with you. Listen, I think I would take it one step further. MBS he's a monarch. He's the king's son. He's effectively the semi-ruler of the country. He's got a 500-foot yacht. Listen, everybody throws out this. They need 85 to 88 a barrel in Saudi to pay their funds. Russia's a petrochemical state. But here's the problem. Unlike, Marathon Oil or Chevron, they have the power of the printing press. They can print rubles. They can print, reals. They can deflate their way out of this in the short term. I think, remember, you've got these sanctions on Rosneft in Russia run by Vladimir Putin's BFF, Igor Sechin. He's probably in Putin's ear saying, screw the U.S. industry. Look, if they're going to do this to us, we're going to break them because none of the wells are economic. I know Jim's been on this story for a while. Here's the reality, guys. And, Jim, I know you've been to Bakken and everywhere else. In the last 2 years, 4 million new barrels of oil a day have come on the market in the United States. None of them are economic. Nobody can make any money, maybe at the margin, unless you're Occidental, Chevron, Exxon, or maybe Pioneer. 40% of all oil being taken out of the ground in the United States, roughly right now, is money losing. And this is an industry that is going to have to get smaller, fast, or it's just literally everybody burning down everybody else's house at the same time.
Yeah, that's a really good point. Brian, I think that the only saving grace, we have a little bit of natural gas is going up a little bit. I'm just looking for something positive.
No, I think you're
Brian,
right. Listen, Jim, you're right. Because I think that if we slow drilling, which everybody I've talked to says we have to, we'll get less natural gas, which means prices may firm up, and that's good for the Cheniers of the world.